In this video, we will demonstrate how to effectively identify the optimal entry point for any trade, whether it be cryptocurrencies, forex, stocks, or indexes, using the Fibonacci retracement strategy. The Fibonacci sequence is not only found in nature, art, and architecture, but also in trading. Let's dive right in. To begin, let's navigate to TradingView and access the Fibonacci retracement tool. To place it on a chart, we will have to select two reference points. Fibonacci retracement levels consist of horizontal lines that indicate potential support and resistance levels. Each level corresponds to one of the Fibonacci ratios or percentages defined by the Fibonacci sequence. To enhance visual clarity, you can replicate our settings to tidy up the display. The most commonly utilized Fibonacci ratios include 61.8%, 50%, and 38.2%, which represent the percentage of an asset's retracement. These ratios serve as valuable references that reflect human psychology. Consequently, many traders observe these levels, leading to price rebounds. To employ this tool effectively, we must first identify the significant high and low points of an asset. Let's take the pound sterling to US dollar pair as an example. The pair rebounded around the 1.267 level and subsequently approached 1.285, which serves as the resistance level based on the previous peak. Therefore, we can utilize the Fibonacci retracement tool to determine the entry price for this pair. Let's turn on our trade dots indicator as our confirmation signal. Free trial is open with the link below. First, we start from the bottom and drag the tool to the side, ensuring that the 0% point aligns with the top of the swing high. The most optimal entry price is typically found at 61.8%. However, prices between the 50% level to 61.8% level could also be served as favorable entry points. It is advisable to set the entry price slightly higher than 61.8% to avoid congestion caused by numerous traders targeting the same level. To secure profits, we can utilize the levels above the 0% point. It is reasonable to expect assets to rise back to the 0% level. If you prefer a conservative approach, you can take your first profit here. Subsequently, consider taking profits at the -38.2% and -61.8% levels. In rare instances, assets may even touch the -161.8% level, as seen in this case. There you have it. This is how you utilize the Fibonacci retracement levels tool to identify optimal entry and exit points. This strategy works in both market uptrend and downtrend, so we highly encourage you to test this strategy across various markets and time frames to identify commonalities and develop strategies that align with your trading style. Last but not least, don't forget to subscribe to Trade Dots to enhance your trading confidence and profitability. Thanks for watching. See you in the next one.